New York, like she said. And I'm going to welcome some amazing panelists up here with me. Come on, guys, let's take a seat.
Come on board.
Yeah. We have several different companies and countries as well represented up here today. It looks like we have a pretty diverse audience too. Do you mind if we take a quick survey by round of applause? Are there any Americans in the house here today? Yeah, okay, there's some. Anyone came here from Europe? Nice, very, very nice. Do we have any Israelis here today? All right. So no matter where you came from, thank you so much. We're glad that you're here to join us today. And I'm going to let these panelists introduce themselves because they're incredible. Let's start with Amit.
Hello everyone, I'm Amit Shah. I'm part of Yes Bank, which is India's fourth largest private sector bank. Like somebody asked, we're not a digital bank, we're a full service commercial bank. I take care of marketing, FinTech, accelerator, and communications. Thanks.
Hi everybody, I'm Ari from Zoos. We do innovation and we'll discuss it.
Hey, Shai Wininger, co-founder of Fiverr and now Lemonade.
Hi, my name is Tal. I'm the founder and CEO of Finovest. We've developed the first one-to-many investment advisory platform for banks.
Hi, my name is Lilach Bar David. I'm the CEO of Pepper. It's the first mobile bank in Israel.
Hey, I'm Nir. I'm from Facebook. I'm head of the business sector, working with Israeli companies on their growth targets.
Hello, everybody. I'm Benjamin Haddad. I run Accenture Ventures in cybersecurity and FinTech based here in Israel.
Cool. So we're going to look at so many different examples of the way that financial technology can be applied today. I want to start us off with an example from India, and then we're going to look at ways it's also being applied right here in Tel Aviv. So Amit, I'm going to do this walk again and give you, can you tell us a little bit about India?
So before we started off, we were having a little chat and the discussion was revolving around how mobile is going to be so critical to FinTech and personalization of services and so on and so forth. And I started reflecting upon the fact that in India, we have 1.3 billion people and we have close to 1 billion mobile phones. So obviously we have jump-started the entire laptops to mobile kind of a journey. But at the same time, what's very interesting is that over 800 million of these phones are feature phones. These are not smartphones. Of the 200, 300 odd smartphones, maybe 80% of them are on reliant regular internet services, right? So one can look at it as a challenge, but at Yes Bank we said it's an opportunity. It's an opportunity to bank the other 800 million people who still have a feature phone. And a lot of our innovations and solutions that we came up with was how do we make these 800 million people which are bankable, which are a very profitable segment, mobile first in terms of their mobile banking, right? So I could, kind of elaborate on some of this during the course of our interaction.
Cool. Lilach, did you also have a video or a short presentation for us about what's going on here in Tel Aviv?
Yeah. So I don't know where it is, maybe there. We need to check.
This is Yes Bank, actually.
No, that's...
Do you want to take us really quick, Amit, through Yes Bank and just tell us what it is? Is it a major bank in India? How many people do we serve here? You want to pass that one back?
Hello?
Oh, yeah. There we go.
So Yes Bank is a fairly large bank. It's a greenfield bank which started around 13 years ago. So luckily we had no legacy issues when we started and our core banking and all other systems were refreshed from day one. Yet we realized around a couple of years ago that there's so much of tectonic shift that's happening in banking that one really needs to think very differently. And that's when we came up with our thought process of ART. We said it's an art of banking where alliances and relationships driven by technology will be the way forward. So while the bank has certain strengths of entrepreneurship, of compliance, of processes, when it comes to the new age solutions and challenger banks and fintechs, the best way would be how do you align with them? How do you bring the best of both worlds so that your customers are kind of the biggest beneficiaries? And through this process, we started engaging with fintechs. And today, I think in India, we are the largest bank in terms of alliances with fintechs for various services, whether it is consumer-facing services or mid-end and back-end services that the bank requires. And during this process, we also launched our accelerator in-house, which has been fairly successful in attracting a lot of fintechs, also from Israel. Payki from Israel is a beloved partner for us. We are integrating our solution with them. And our visit to Israel, in fact, is to see if we can take home many more startups from the cybersecurity world and data analytics side of things.
Entrepreneurs in the house, did you hear that? He wants to talk to Israelis. You should see him afterwards. All right, cool. So we have in India mobile phones becoming a main conduit for banking. What about here in Israel, where we have a much, much smaller market? What has your experience been like?
So over the last 2 years, we have been building the bank from scratch. And I think, it's not a surprise that we are doing that in Israel because, we are leveraging the technology and the best talents we have in the startup nation high-tech community. So I think, building a bank from scratch it's not an easy task. And you need to convince people and actually, convince them to move from any other consumer mobile startups in Israel to work and build a bank in a category that nobody loves at the end. And for us, the task was to build a bank that people would love. So I think hopefully we were successful in that mission. And at the end, we want to see people, using the product and enjoying banking as it should be.
Since we have some Americans and some Europeans in the audience as well who may not know what Leomi is and what Pepper is, so it's really clear that from Tel Aviv to Mumbai, mobile banking is in the heart of this fintech storm. I'd love to hear more also from our other panelists, how fintech is changing and making new possibilities, especially thinking mobile first, for investing, for insurance, for all kinds of products. So Tal, do you want to start us off?
Yeah. Well, first of all, happy to be here. Nice crowd to see from this side. Well, once all of us moved to mobile, a lot of opportunities that were, let's say in the traditional banking world were not available is now, it's a must. And when we're talking about investing, let's say investment advisory, the traditional way is to go and meet your advisor in a branch or have a phone call with your advisor. Your advisor would suggest, let's buy this or buy that. But coming to think of that, how many people can take half a day off and go to the branch and meet their advisor, have this phone call about their portfolio in the middle of the day? And now what we see, what Finovest is doing, like a platform that enables the same professionals, the same advisors with the same knowledge that the bank has, with the experts, we enable them to generate and disseminate personalized investment recommendations to numerous clients simultaneously. And now the clients would receive a push notification on their mobile device and just enter the bank's mobile app, see exactly what's recommended, what to buy, what to sell. They can read the rationale. The exact thing that would happen in a discussion with your advisor. You can see everything. And not only see it, but operate. You can just click the button and automatically all your trades will be executed in the market. And this is something that is changing everything. This is changing the business model where one advisor can serve only one client, but now the bank's experts and analysts can serve all the clients in real time whenever there's something professional to say. So using mobile devices enables to fundamentally change business models, not only in the investment world, but really to change business models, the way that we traditionally thought about banking. We saw in this lovely short video how Pepper is tackling the traditional banking. So, of course, now with mobile devices in each of one of us pocket, enable us, the financial institutions, us to send a push notification with something that is personalized, something with added value, not just marketing. This is not emails. You can really personalize whatever you want to tell to your customers. So all the digital engagement, all the personalization is there. The technology is already here. And of course, it changes the business models.
Yeah, I want to hear more about that and the way that it changes different business models and also makes it more accessible to different kinds of people. You know, who has time to always be going to the bank for different advisors and to always be learning, but we all have time while we're on the bus or while we're in a cab, be on our phones learning more about our own financial well-being and independence. Shai, can you tell us a little bit about homeowners insurance and how Lemonade approached it differently?
Sure. So, you know, you mentioned, you know, the old world where we would go to a real person and have a discussion about something. And in most cases, it would be a copy-paste discussion that that person used to have with the person before you and the person before that. And so in a way, it's funny that you think about it, the automated solutions in some situations are even more personalized than the person itself. Because they learned a certain playbook and they just keep running and running on by the same rules. So insurance is even more, I think, kind of prone to that kind of disruption. Because with insurance, what we're basically doing is monetizing probability theory, right? We have there's risk and there's pricing to that risk, and we have to find the best price for that risk and decide which kind of risk we want to take and which we don't want to take. And if you think about that kind of complexity, it's huge. I mean, it's not something that a human can actually do. If you look at an address and, you know, if you're a broker, you have to look at an address and see if that's a building or a person that you want to insure. What are the data points that you have, and what's your capability as a human being to analyze that level of risk and to come up with that decision? And obviously, that is something that we've been very kind of concerned about and investing a lot of our time in. And I think that in our case, we managed to create an experience that takes something that used to have some, you know, you used to kind of call someone up, have them come to your house, evaluate your stuff, evaluate your apartment, and then give you a price, where now you just pick up an app or you go online and you do that in less than a minute. And the personalization level is much greater because we can get most people the right price, whereas, you know, insurance, just like any other statistically based service, when it goes back to averaging, everybody pays the price, because a good risk pays the price of a bad risk and vice versa. And so once you can personalize and kind of go into the specific details based on a lot of data that is collected by mobile devices and services such as Google Maps and tons of public data that's out there, you can get basically up to 80% cheaper products in insurance, and that's what we've been doing.
So hold on, you're telling me that the data you get from my mobile phone will impact the price of insurance I can get and the options I can get?
So that's a great question, and it's not only the data that comes from your mobile phone. I should say that there's where the industry wants to get to, and there's what's possible in terms of regulation. Obviously, insurance, just like banking, is a very strict market and is heavily controlled by regulation. And what we're now doing is using the kind of the best flexibility that's out there by regulators to improve the personalization that we can do on the products. But at the same time, we start collecting tons of data on our customers. So just to give you an example, we have on the few tens of thousands of homes that we already insure, we have close to 100 million data points already, and that's in less than a year. So think about the richness of that data and what it can do to be able to feed machine learning and AI algorithms to better evaluate what kind of risk are you. And not only that, to start creating a model, kind of a model around risk where you can say, hey, you know, that person is a great risk, and that new person, which I haven't seen before in my life, I can say that he's very much like that person just because of various digital signals that we can grab from him just during his onboarding. We can evaluate risk much better without even knowing that person, without even knowing that address, and so on and so forth.
I think you bring up a really good point about the personalization and the way that we're really changing the way we interact with financial products and services. Here we have also Nir today from Facebook, and I'm really interested in what Facebook is doing personally. There are already lots of users around the world who send money peer-to-peer, send money to their friends through Facebook Messenger, just like they would through PayPal or Venmo. And there are already banks in the world like Nubank in Brazil that collect mobile data and can give you a better loan, better insurance rates based on who you call. Do you call your mom every day? You probably are reliable. So I really want to hear more from Facebook's perspective about what do you see changing in the terms of the lines between a fintech product and service and a social app?
So what we are mostly seeing is the companies that are able to succeed and rise above the noise are companies that are not stopping at the tech side. So we all call it kind of fintech, and we kind of glorify tech. But it's mostly about the people that consume the technology. And when companies like Lemonade, like Pepper, think about the consumer and think about that experience and how they both build the product and then market the product based on the people that are eventually going to use the technology, then that's where I think things become interesting. And I think also to Shai's point, the ideas that Shai is talking about with regards to being able to collect a lot of data and then personalize the offering and personalize the risk model, then this is basically what also happens on the marketing world. So on the marketing world, you collect data on your users, and then you're able to say, okay, I need more users that look like this. And then companies that do that and are heavily invested in the data side of things are able to market themselves in a way that is much more efficient to the right type of audience with the right type of offerings. So those are areas that we see companies succeed a lot in. And just on a similar or connecting point, in terms of the experience that these companies are generating, then the more the experience is a seamless type of, we call it immersive type of experience, that the experience doesn't take the user outside of their kind of original location and puts them in another place, right? That is the old advertising world, is you'll see an ad and you'll go to a store. Now, we need to try to avoid that as much as possible and to create experiences that actually are enabling people to interact and to create those financial experiences as well within the environments that they're typically at. So within a social environment, within a messaging environment, and look at that as kind of a very strong USP, so a very strong point that people it will resonate with people and will create a lot of added value.
Are you starting to see more companies integrate directly into Facebook Messenger to talk to their customers, to talk with even their coworkers?
Yeah, so we're definitely seeing that. We're seeing that on Facebook Messenger. We're seeing that in Messenger, in language type of or chat-like experiences. So Lemonade has a chat-like experience which isn't on Messenger, but is also working very well for them. And the idea, again, like Shai talked about, so the idea that there is a person on the other side, which can be a real person, can be a semi-real person, that you're having this conversation with, that he is the one that you're consuming the service from, and that makes it very, very personal. And there were, maybe Shai can tell a little bit about the experience that you had, like the experiment between the real person and the non-real person. So I think that's an interesting area. So I'll move to Shai, but generally speaking, we're seeing more and more of those type of interactions happening more, and companies actually offering even investment type of experiences in a chatbot type of experience.
Sometimes even on Facebook itself, yeah?
Yeah. So sometimes, yeah.
Before we jump over and talk more about AI, I actually want to ask Benjamin over here a question, because I know you work with all different kinds of companies, and as we look broader, what do you see happening in the blurred lines between different kinds of tech companies, different kinds of fintech services, and the way that we now think about customer first as opposed to getting the customer to fit a product?
Yeah, thanks. It's a good question. So if you step back and you look at fintech, broadly speaking, and you take a sector lens on the overall financial technology space, including the retail domains that will serve individual, you and I, and the problems and the pain points that we have in dealing with banks, plus the gigantic spend that financial services company put on technology. You aggregate it together, and well, the view that we had since some time now is that the first wave of fintech that we're still riding, and the second one is starting, was very much about B2C, about helping the user experience by mobile experiences, peer-to-peer lending, and you have many, many different examples. However, the financial services professional community, the tools that they use to interact between them and among themselves within bank, the institutional finance fintech, the B2B fintech, which if you aggregate the trading systems, the risk management systems, the back office systems, is a hundreds and hundreds and billions of dollars business, hasn't been as affected as you would have thought by this huge wave of innovation. So when we look at it actually on an aggregate level, we see plenty of fantastic innovation really graduating from the earlier stages. But really, 2/3 of unicorns in fintech are what you could simplify to the extreme B2C fintech, right? Helping you and I. And I think it's changing gradually. You might have seen yesterday the acquisition of eVestment by NASDAQ for $700 million.
Wow.
And we think this second wave is just starting, and we as Accenture obviously are very present with accelerators, with a number of tools to help that innovation readjustment.
Yeah, let's talk about, for a minute, this definition of FinTech. Yeah. This very fluid definition of FinTech. Financial technology can mean so many different things. And sometimes it can be a small startup, that goes big, like Lemonade, and sometimes it can actually come from the bank, like Pepper with Leomi. What do you guys see in not necessarily the battle, but the growth of both FinTech from banks and from startups, and even from other companies outside? I know in New York, a lot of banking executives are very concerned about whether Amazon is going to start offering financial services. As we look to the future, what do you see about these blurring lines between tech and fin?
Can I add one point?
We can all go down the line.
Yeah,
this is a big one.
We'll go through the line. One interesting reaction to Nir's comment applied to fintech. If you look at one of the historical success stories in fintech, Mr. Bloomberg, he disrupted the whole market that was dominated by Reuters at the time in the 90s by building a company that ignored completely this whole marketing 1.0 stuff, which is target to your audience. He was very much like Ford's Model T. One item, one terminal, priced everywhere the same thing, not targeted to any audiences. If you want it, it's the same thing. Exactly like Ford, who said, if you want a Model T, you can have it in any color as long as it's in black. Mr. Bloomberg did exactly the same thing with his terminal, and it's a fantastic story, built on what then Facebook did. Bloomberg already in the 90s invented this social community thing. Each time you were a Bloomberg user, you would have an @bloomberg.com email address and created massive community where you could splash your community with, sales pitches. And so I think that's an interesting nuance to this whole hyper segmentation that we're seeing these days in fintech, where you could also uniform everything and invade the world just like he did.
So to your point on kind of for enterprises, for businesses, and with banks, without banks, then I think we all agree that there is, like a couple of years back, then it would have probably been, for sure, fintech is trying to disrupt and overthrow the banks and overthrow the traditional players. And today it's kind of a mixed type of, even within the panel, some are coming from the banks, some are trying to disrupt the banks. I think there's probably room for both. So some real big financial institutions will rise from the fintech industry, so from startups that will eventually become very big. On the flip side of that, I think that in some cases, banks or financial institutions, standard ones, will become a little bit of kind of platforms of entry points into other services, so that they won't end up actually developing those services themselves, but actually allow for those services to be offered through the banking platform. So like a TransferWise through a number 26 bank or something like that. So, or eToro, actually, an Israeli example that is doing that with Sberbank, the biggest Russian bank. So to be the trading platform for Sberbank, but still as eToro, still eToro being the functioning company. So fintech integrating and doing exactly kind of co-opetition with the banks.
So you don't see it as a competition or a rivalry, you see them as coming together and learning how to work together.
Yeah, I'm saying I think we'll see both. So we'll see a few, and maybe further along the panel we will hear them, that still think of themselves as kind of overthrowing or becoming one of the biggest financial institutions in the world. Definitely Amazon, Apple might play in that direction. Who knows about Facebook?
We already have Google Wallet and Apple
exactly.
Pay. Who comes next? Just for everybody in the audience, I want to tell you guys, if we make it on time and we're good, then we get to have questions at the end. So as if we're talking, you think of something you want to ask one of the panelists, keep it in your mind.
So I think, lately it's about collaboration, because if you look at banks, traditional banks are having the debate regarding whether we can do it by ourselves, whether we can buy a fintech company, whether we can, develop an innovation center and so on. And I think, Pepper is the only example in the world that traditional banks is actually funding and supporting a fintech company, a startup within the traditional bank, trying to disrupt that bank and the entire category in Israel and around the world. But obviously, the movement have been over the last few years that the banking industry have, come into the conclusion that disruption needs to come, and consumers' expectations are sky high, and they cannot do it alone. So either they will collaborate, or in the end, millennials will prefer services coming out of tech companies, not from bank. So something needs to be done, and either they are doing that or thinking about it, but we will see the movement coming soon.
Do you think part of that it has to do with consumer trust in banks?
I think overall in banking, trust is an issue, because people don't like the category, but they trust the bank to manage their money. So nobody wants to put money just in a consumer mobile application, as good as it is. So for us, leveraging trust, capital, and license and knowledge, it's a big issue. And overall, when you look at the industry, there are a lot of barriers to enter. So you need to work around those barriers to actually have a product to offer to the consumers.
So I totally agree that we've come to an era now. There's more collaboration. At the beginning of the fintech, that was not so long. It was like 3, 4, 5 years ago. Banks were terrified. They thought everyone is coming on them. The public don't like them. Cool new startups are coming with financial services. So they were panicked. But I think that now that the collaboration became, from this point, as Benjamin said before, the first wave was B2C. And now this panic is down, and banks understood, as I see it, that trust is a big issue. People may not like their bank, but they trust them. And when you're talking about money, your money that you work so hard for, you trust the bank to keep it there. And then taking, the huge buzz around fintech. There's a huge buzz around fintech and about the first disruptors. Okay, let's talk about Lending Club and all these kind of fintechs that just came out of nowhere giving financial services. And you mentioned, of course, Apple Pay, Google Wallet. That's payments, that's lending, that's investing, that's almost everything that a bank is doing, loans. This is what a bank do. You put your money in the bank, and bank give a loan. If a startup with few simple clicks gives you a loan, so the banks are thinking, whoa, where does the cheese move? So I think we're coming now to an era that the B2C made a huge buzz, and now it's becoming more institutional. It's coming deeper. And it comes the same from the first discussion we've been talking about the customer experience in the mobile. It starts from there, because everyone is fighting on the customer. They want the customer. They want the customer to get great service. They want the customer to get it on their mobile. So what banks now are doing, really looking for technologies. They understand they cannot do everything on their own, so it began with a collaboration. Okay, let's see what technologies are out there and how we can implement them to help our customers. So it's not a very, well, there is a B2B business, as you said, institutional banking or financial services, but it's always, from my point of view, it's a B2B2C. Okay, it enables banks to take small startups or big startups, doesn't really matter, and to implement their technology to enable the banks to serve better their clients and, you know, to cope with their new startups competition. So at the end, you have also to remember that banks are, I think, maybe they are highly regulated. It's very different from any other industry, and they have chains. I mean, regulators all over the world, a lot of chains, and since 2008, the financial crisis that just made a mess in regulation in banking, and now it's really hard for banks to implement that. But because of those startups, because of Amazon, Facebook, Google, which is a real threat, more than the fintechs, because if they want, I mean, if Apple tomorrow decides they want to be a bank, probably most of the iPhone users will be Apple customers.
So you think if Apple or Google were to enter the game and get themselves a banking charter,
I'm not sure. As I said, it's a very regulated space, and the beautiful point is that you can give financial services today without being a bank.
Yeah.
So this is the point, and I think at the end, probably banks, because they are regulated, and there will be enablers for technology from the outside. Okay, technology will come, there will be enablers like a platform to enable their customers to use any technology that comes around. So as I see it, definitely collaboration, also from Finovest, we enable the banks to better service their client with a perfect customer experience. You know, just get a push notification, you have an investment recommendation, poof, you just click and trade. So it's more about collaboration as I see it now.
Shai, I'm going to make the question a little bit harder for you because we've heard a lot about collaboration. I really would like to hear your perspective on business models. I understand like Lemonade is very much of the perspective of not that I have a different account at my bank and my investor and a Facebook account, but that everything comes to me on my phone. So the user controls their identity. How do you think that the growth of fintech and the struggle of banks to keep up will make banks reassess their business model for services like insurance?
Sure. So first, with insurance, it's a little bit different because we're also disintermediating an industry, which in banks it's not exactly the same thing because you have your own branch structure and your own employees, so it's a little bit different. It's direct to consumer anyway, in most cases. I think that with InsurTech, this is the path of the first resistance where we always think about the big insurance companies, but actually it's going to be the brokers who get hurt first, and that is something that it just comes with the disruption as part of it. In terms of the business model, I think that if you look at the InsurTech and also fintech, general fintech landscape, you see that my colleagues here spoke about back-end disruption or just new technologies coming to the back-end, not necessarily B2C. And there's obviously B2C, which is the most common one we see mostly. But there are shades within those as well. So I think that most companies you look at in terms of numbers are just on the kind of above the waterline. So these are comparison websites, robo-advisors, apps that rely on infrastructure of other banks or insurance companies to operate. And I think that the problem with this approach is, beside the fact that it's much less defensible as a company, it doesn't really allow you to change fundamental things within the way that these services work. So I'll just give our own example. One of the things that people hate most about insurance companies is the fact that once they need to pay a claim, they don't want to pay it, right? And that's like the first reason you go to an insurance company. You want to get your claims paid when you have something bad happen to you. And when we kind of studied and researched why that was the case, we noticed that the problem was not with the people working for the large insurance companies. It wasn't some kind of a standard that was generated during the years. It's just about the problem with the business model. Because eventually you have two sides fighting over the same dollar. And when you have an outcome where there's one massive insurance company worth 80, 100 billions of dollars fighting with just one person, it's pretty obvious who's going to win that fight. And I think that the way to change those things, and we published not long ago the fact that we made a world record in paying claims in 3 seconds. So 30% of our claims are paid instantly through the AI. You just go on the app, you go through a set of questions and answers, you communicate with the bot, and then you get your money into your bank account in literally seconds. The only way to do that is to change the fundamental business model, because if we would have the incentive that insurance companies have not to pay claims, there was no reason to do something like that. So once you solve fundamental things in the engine, then you can really create amazing user experience that goes beyond pretty pixels and nice fonts. It's actually how humans interact with those products.
So going mobile isn't just about having it on your phone, but about rethinking the way that you center and focus those services.
Oh yeah, I think that the mobile side is important, but it's obviously not the driver here, at least not for us. We think about, you mentioned, what's going to be here like 10 years from now. Is it going to be the same large banks, same large insurers who have purchased some of the small startups, and some of the other startups just failed or continue to work on a very low scale, on a very small scale? I think that we are going to see some companies, kind of break through that glass ceiling and become one of the biggest, FinTech or finance companies in the world. Just like if we roll back and see what happened to Amazon, I think nobody believed that it's going to get to that scale, and it did, and in a very short amount of time. So this is the power of technology, but it's also the power of finding a new way to distribute your product. And we haven't talked a lot about that, but one of the things that are, I think, kind of holding the traditional companies, banks, insurers back. Oh, and I see that the band is coming. That's a very subtle hint, right? I think it's the fact that it's becoming harder and harder and more expensive to get new customers, and to be able to advertise on Facebook. Everybody can do that. The question is, what happens once you see an ad? Can you take action at that point in time? Can you actually convert and make the customer acquisition make sense to you as a new business and grow? And I think that the traditional businesses are going to have a hard time converting those high street offices of State Farm and Allstate and banks to something that you can take action once you see it on Facebook, once you see it on Google.
I think that overall, when you look on what is different between a mobile bank or a traditional bank that has a mobile application, it's all about disrupting the business model, as Shai said, because you need to redefine all the processes, all the product, the customer experience, the employee experience also, because you are developing and designing the entire proposition from scratch, and creating a self-service kind of a product will help you redefine also the business model, the pricing, and the experience. And overall, when you look on the comparison between that kind of a service to the traditional service, it's not just about the mobile device, because mobile is engaged with the two different offerings. It's about the processes, the experience, the product, and overall, it's an entirely new approach to the same category.
So in the interest of time, I actually want to move on to the next question, and we'll start with you, Ari. The next question is really, really broad. I want to hear what is the next type of technology that is getting you really excited, and why. What you think has the most disruptive potential for the next year upcoming. That can be AI, that could be blockchain, that could be cryptocurrency. So what is it that's getting you really excited with its disruptive potential, and why? And then we'll go back around.
Okay. I want to wrap together everything we said, okay? So actually, there is collaboration. For instance, Citibank is having an accelerator here, but let's think what can be done with that. If they have startups that introduce efficiency to the bank, it's okay. If they introduce new business models, they cannot do it with Citibank. They can either have a new brand like Pepper. You cannot do it in Leumi, you have to do it Pepper, it's a different thing. Or they can do it entire thing differently and not with collaboration with a big bank or something. So if we think about the mobile that we discussed before, think about this. Imagine the ideal bank teller. Can you imagine that? I mean, imagine the ideal broker or insurance agent. It would be friendly, knowledgeable, professional. It would like to help you, okay? Now, take that and insert it into the mobile. Create an app or chatbot just like Lemonade does, okay? And I think this is the biggest opportunity because I think the FinTech, it's all about trust and relationship, and it's emotional. Money is emotional, first of all. So I think that if a disruptor can take this challenge and create something very personal in mobile, it's a great opportunity because mobile is personal. People use it in a personal level. So if you can have a friendly, ideal broker or agent or insurance, just like Lemonade does, here, that's the biggest thing. And the technology is just support it.
So okay, that's a really interesting perspective. So AI would be something that's really important for you as long as we're doing chatbots and data processing.
Of course. And chatbots.
Amit, I know that Yes Bank has some starting experiments with blockchain technology, right? Can you tell me a little bit about it?
Yeah, so these are very preliminary times from a blockchain perspective, and but we were one of the first banks to experiment on supply chain financing with one of the largest electronic goods manufacturers in the country. So we essentially automated their supply chain financing of their vendors and bought their vendors and the company on blockchain. But these are initial days, as I say, right? Because even the underlying technology is yet to evolve, and the company's awareness and willingness to onboard the entire value chain on the blockchain is also very critical. But I'm going to take a step back. I'm just going to, as reflecting upon what Benjamin said and what some of the others said when we were discussing about future of banks, because that's closest to me, right? Where will banks be 10 years from now? Will banks be around 10 years from now? So if you take a step back, there are 3 Ds that are disrupting the scene, right? One is the demographics that we've been speaking about. People are younger, more savvy, and want to do things differently. There is the digitization, which is the innovation, digital technology, so on and so forth. These 2 Ds are disrupting the B2C space first, right? Because that's where the immediate impact is. And all the fintechs and challenger banks and new age companies are nibbling on the B2C business. They're not deep into it, they're still doing the easier stuff, right? There aren't too many companies that lends to SMEs against collateral, for example. Most of them do unsecured lending all over the world. So they are nibbling on the sides. What is preventing banks from going kaput overnight is the deregulation part. The regulation which is very critical, or the deterrent for banks and insurance and so on and so forth, is actually also what is stopping them from going kaput overnight. Regulation is preventing fintechs from taking over the whole space, right? Because if we were to deregulate too quickly, which will happen over a period of time, I think 8-10 years down the line, the regulations will look very, very different from what they look today. In India, you have yet another complexity of the India stack, right? There are brilliant APIs released by the government around unique identification, around unified payment interfaces, so on and so forth. I mean, these are some brilliant APIs that are not available in most parts of the world, but these enable banks and fintechs equally to reach out to their consumers. So my take and our take at the bank is, as long as we can start having a mindset of a tech company, right? Behave like a tech company in the business of banking, your likelihood of not just surviving but doing reasonably well in the mid to long term is going to be good. How do you do that? Do you do it on your own? Do you do it in partnership with fintech companies? Do you start a wing of your organization which is digital only? Is something that will evolve over a period of time. What technologies to bet on? The way Yes Bank is looking at it is we are, throwing spaghetti in all areas, right? Some will stick, some will fall. So we want to be there in blockchain. We want to have our chatbots and artificial intelligence and so on and so forth going on. We can't not be around, right? I mean, and what picks up, what shapes up is something for us to wait and watch in a sense.
Can I a little bit disagree with that? Because I think...
we allow. It's Israel.
Because I think that overall, when you look at traditional banking, there is the organizational culture resistance that will definitely not allow you to compete with all the tech guys. So either you build something really from scratch, new, you explore the talents around the country. I don't think that you can do it from the inside. So innovation centers is nice, it's cool, it's fun, but it won't disrupt developer position at the end.
I think local regulations have a big difference in part to play in that. I mean, Indian regulation and Israeli regulation and American, which is the worst, all create a completely different playing field for these fintech companies.
But I think overall regulation wants you to develop something new from a consumer point of view, but it takes time.
Yeah, so I kind of want to build on what Amit said, and I think that, you know, when I think about technology, I kind of start to think about it as a commodity in a way, from our perspective at least. Even AI is becoming commoditized all the time. We see that by the work that Google and Facebook and Amazon are doing. I think that the next kind of wave of disruption is going to come by entrepreneurs taking on hard problems, taking on the uphill battles, taking on creating full stack kind of, you know, companies, not just becoming the, you know, replacement broker, replacement agent, replacement advisor, but actually creating a bank from scratch, actually creating an insurance company from scratch, a remittance business, whatever it is. And so I think that, you know, in terms of technology, probably everything we can talk about now is going to be used in the next few years. The question is how many companies are going to be created with that kind of idea in mind to become the next, you know, become the next huge bank, to become the next
Ben, you wanted to add something?
Farm.
It's not to disagree, it's to add another point. I think in addition to the regulatory point and the technology point, which are clearly going to have their impact, one aspect of the actual sector that is sometimes neglected and is an important nuance is the actual competitive structure. If you look at how the assets are owned in the financial services community, there is a huge concentration of assets, and that has major implication in terms of the competitive structure, the barrier to entry, how much disruption will be enabled by the sector. The top tier banks, Citi was mentioned, Goldman was mentioned, have enough resources, have enough presence, have enough deal flow to acquire technology at a pace that will let them own the next wave as well. And I think that's a fundamental point that's sometimes a little bit neglected. And on the mobile adoption, I think there too, it's something neglected. I mean, there is a little bit of a stereotype around everything going mobile. And again, if you look at trade supply systems or back office systems allowing you to do a reconciliation, settlement, reconciliation of trades, that's not going mobile, nowhere. It's not, and there is also a reality in enterprise business around mobile, which is around cyber. There is a gigantic problem with the number of attacks into mobile systems. And IoT security is a mobile market that's 35-fold growing. And I think that's another nuance into the whole mobile stereotype, you know, everything is going mobile. It's driven by cyber attacks, which are exploding in all IoT devices, including the phones.
So I'm sorry we didn't have time for questions today, but I'm sure you guys can tackle them right after the panel. They've got a lot of different opinions and experiences to share. I want to thank everybody for coming today and chatting with us about FinTech, financial technology, where it's going in the future. And I hope you have a great day in Tel Aviv.